What is going on, all my traders and investors? We had a very bloody day in the stock market today. Now, there is some ways you guys can use this volatility in your favor to make money, and you want to be on the winning end, not the losing end. So if that sounds like something you guys are interested in, as well as being the most honest YouTube channel on YouTube, calling out the best stocks, the worst stocks other YouTubers are quite frankly pumping that are dog shit companies, we are calling them out on this channel. So if you want to be a part of that, go ahead, hit the like button and subscribe for me. I do greatly appreciate it. It helps the channel grow. As well, I did create a Discord where I will be sending out my buy and sell alerts when I buy and sell shares and options. If you guys want to be a part of that for free 99, go ahead, hit the link down below and be a part of that. Now, we're going to be talking about the 3 best ways to make money from this volatility, whether you're experienced or a new investor in the markets. Now, I would encourage you guys to not sleep on this opportunity because you as long-term investors want the stock market to go down. It's contrary to everybody's belief. You want the market to go down to go shopping at cheaper prices and potentially make even more money from the volatility like we're going to talk about in this video. So now I do not want to waste any more time. Let's get right to it. When making this video, I think we should address the stock market and why it has been selling off in the aggressive manner that it has been. And it is pretty straightforward. So with the bond rates going up, it makes bond rates as a safe investment a better alternative to some of the risky, more overvalued stocks that have went up over 100% for the year. So that's why you're seeing a lot of the hot names like Neo, Palantir, all the hot stocks selling off, and a lot of that money is going into bonds because it does not evaporate, it just moves into different segments. Now that is why the mortgage rates have went up so much this past week as well. And if you are in the market to shop for a new home, I think sooner the better is probably the best bet because overall this is a bullish sign. This is a bullish sign that the economy is getting back on the right track overall because cases are going down and there is more assurance in the market. Believe it or not, that's what is going on. Overall, this is bullish long term, but it does cause people to sell out of stocks and move into bonds. But bonds rates going up means that it is bullish in the markets and the markets are stabilizing. Back in March and pretty much this whole last year in 2020, nobody wanted to buy bonds because you could get a better rate in the stock market, and the bond market was seen as a low yield investment, which it still is. But as the rates go up, it means businesses are doing better, people are doing better, so they have more money to pay towards interest on loans. Now that is the long story short. It does get a little bit more macro and micro than that, but that is essentially what's going on, and that is all you need to know. And I would encourage you guys to not panic too much. Just make sure your margin levels are not too insane. Now I'm going to show you guys the first thing that you guys can do to make money from this volatility, and this is the most straightforward thing you guys can do and the most obvious thing you guys can do, and that is going to be buying the dip. And you guys should all be buying the dip. There is no reason to not buy the dip. Literally, if you had $500 in your bank account you didn't need, I would throw $150 on every one of these red days because we don't know how long it's going to last. So I would spread it out, but I would just throw money in, throw money in, throw money in. It looks like you're throwing money into a fire pit, but that is not the case. The market will always come back. Essentially, if you believe in the American economy, the market will come back. If the market is crashing, if there is zombies or fucking alien invasion, then I could understand sell out, buy gold, whatever, mint some swords, all that good shit, crazy shit. But essentially, you guys should be buying the dip if you are invested in the market for the long term and you have confidence in the. Another thing you guys can do is also pretty straightforward and it is applicable to any skill level, and that would be buy puts on your biggest positions to hedge your position on the way down. Now, I personally did not, and I didn't see this really dragging out this long. I figured it was a one and done two-day event at max. But it does look like we're going to drag this out for a while. So that's why I stress the margin thing and not to be too over margined. But first thing I would do is go to how long you think this will last. If you think it'll last middle of March, end of March, I would do that. I'll just say the middle of March because I do not think this will be a prolonged downtrend. At least I hope not. 20% is considered a bear market once we go down 20%. So we are kind of getting close to that. I know we're down about 10% right now, give or take a little bit. But essentially on your biggest positions, like NEO is 20% of my account. It was around 25% of my account when NEO was at $60 a share. But it's not anymore. It's around 17% of my account, but still a fairly big position. What I would do, I would buy a put closer to the actual current share price is best. So you get the $365 put, buy it, and that would protect you. Anything under $44 a share, in this case on NEO, would protect 100 shares because you would be in the money. So if you had 100 shares like I do, if NEO went to $40, which would be the next strike price, you would essentially make $400 and protect the $400 you would be losing. So essentially you would not lose a ton or a great deal amount on your initial position, but I have not been doing that. I have been buying the dip instead. Hopefully that doesn't bite me in the ass because I have lost a lot of money. And if you did buy puts on the first day or even the second day when this happened, you would be looking pretty good right now. So that is the other way you guys can make money. The last way we're going to talk about how you can make money from this volatility. At least in this video, like I said, there is a lot of different ways you guys can make money, but it would be selling puts, because when stocks get destroyed like this, people just inevitably assume the stock will keep going down and keep going down and keep going down, which a lot of them, it seems like they will, but they won't. Rest assured, they will not keep going down like this forever. So the put premiums get jacked up. Now I saved this to the end of the video because it does take more capital to do this, but it can be very, very, very effective. So essentially when you sell a put, you're agreeing to buy 100 shares at this price. So you collect this $310 and then you're agreeing to buy the shares at this price. So if you're comfortable buying NEO at $40 a share, you could sell this, collect $310 a share. If NEO closes March 26th above $40 a share, you would not have to buy NEO at $40 a share, and you would keep $310. Now, the beauty about this is if NEO were to shoot up tomorrow or shoot up Monday, and this contract would pretty much depreciate very fast, especially with a company that has earnings coming up, like NEO has earnings March 1st. If they shot up in any way, the put premium would get destroyed, and you could close out the position by buying back the contract for, let's say, $150, make 50% on the contract, and then walk away with it risk-free. And it really isn't a risk because you put the money up to buy the shares anyways. So worst case scenario, you buy NEO at $40 a share, or whatever stock you sell the put on, you buy it at that strike price. Now you collect the premium, and like I said, if it expired above $40 a share, then you wouldn't be obligated to buy anything, and you would keep $310 cash. Now you do get the money right away. So the only thing is you have to have a higher cash balance. In most cases, depending on what stocks you do this on, it applies to all stocks, but you do get the money up front. Now, if you're not buying the dip and this is what you're doing to try to hedge your position in portfolio in different ways, this is a very good option you guys can do. And I would really do this on a company that has a little bit more IV than NEO has right now, but it works the same with any stock. Now, that is going to be the end of this video, and that is really the 3 best ways anybody could make money from this volatility. Do not panic, guys. This is not the end of the stock market. This is just a blip in the road to a longer term journey. Now, if you guys got anything useful out of this video, if you got some insight, hopefully gave you guys more confidence in what is going on right now, go ahead, hit the like button and subscribe for me. Comment down below whatever. I respond to every comment, unlike a lot of other YouTubers, and I will gladly have a conversation with you down below. Now, I will see you guys later. That is all I have. Peace out.